Hello and welcome to Legacy IAS Academy. In this video, we are going to discuss the previous year questions related to Indian economy from the year 2019. So the first thing is there were a total of 14 questions coming from Indian economy again, and static questions included 11 and current affairs were 3. However, what you can observe here as well is that 2 questions were still something which were related to static itself. So with a strong static knowledge, you could have solved almost 13 questions which are related to Indian economy. So let's see the first question. This is a repeated question, I would say, as in this question was repeated again later in the year 2021. So the money multiplier effect, they have not changed even the options. So the money multiplier in an economy increases with which one of the following? For this, the answer was pretty straightforward, right? Increasing the banking habit of the population. The only change they have made in this particular question is they have interchanged the options here, right? So C was B then and B was C. That's about it. They did not change anything else. Okay. So first question answer, the answer is B. The next one, in India, in any given year, official poverty lines are higher in some states than in other states. Why is it so? So poverty estimates in India are done on the basis of the expenditure, right? Consumption expenditure based on a formula given by Suresh Tendulkar committee. Okay. So only in 2016, a question was asked to Niti Aayog as to which method to use to determine the poverty line. So there were 2 options suggested by Niti Aayog. One was related to the Suresh Tendulkar committee. So this could be used. The other one was Rangarajan committee. Rangarajan committee's, methodology could be used. So the government stuck to the Suresh Tendulkar committee, a way of calculation of poverty lines itself. So as of now, according to the Niti Aayog task force, we have taken the suggestion, the government of India has taken the suggestion that we are going to stick to Suresh Tendulkar committee methodology itself. So how much is the official poverty line in India? In urban areas, it is rupees 1,000 per capita per month, right? Per person per month, it is rupees 1,000. And for rural area, it is 816 rupees per month per person. Okay, so these are the official poverty lines for the entire country on an average, but they change from state to state for urban as well as rural, right? They keep on changing. Why do they change? Why? Because it is based on consumption expenditure. So when we say consumption expenditure, the prices of these items to be purchased will be different in different states because of the varying level of taxes, right? Indirect taxes will be different for that reason. So by that measure, the answer would be B only. Price levels vary from state to state. So poverty rates vary from state to state. This we clearly know. Gross state domestic product varies from state to state. This also we know, but does not ensure that the poverty lines are different. Quality of public distribution, this is also fine as a statement, but that does not signify anything related to poverty line. The only option which is suitable here is option B. Next, which one of the following is not the most likely? See, it is a negative question, not the most likely measure. So what you can observe in the Indian economy related questions is that they generally ask this negative connotation questions, right? And that would put you in a fix that becomes pretty difficult for some people to answer it. Okay, so which one of the following is not the most likely measure the government or the RBI takes to stop the slide of Indian rupee, right? So the Indian rupee is losing value. It means the Indian rupee is depreciating. Which of the following measures is the government not going to take? So not going to take, right? Which will basically mean that if you take this measure, the depreciation will become worse, right? If you do one of these, it would lead to depreciation of the currency more, right? Choose that as an option. Okay. Curbing imports of non-essential goods and promoting exports. What would this lead to? This would actually lead to appreciation of your currency, right? So this is what the RBI or the government would do. So this cannot be the option. Why? Because it is a saying, not the most likely. Second, encouraging Indian borrowers to issue rupee denominated masala bonds. Again, the demand for rupee would increase, which means appreciation of the currency would happen. Easing conditions relating to external commercial borrowings. If you're borrowing externally, the inflow of dollars would increase. That is through ECBs. If you are borrowing dollar loans, which means dollars will flow into India, which means again appreciation of our currency would happen. So this is also not the answer. Following an expansionary monetary policy. While this would be indirect, you have to delve a bit deeper into the concept now. So expansionary monetary policy would entail that money supply would increase. If the money supply increases, basically we are reducing the interest rate. So when money supply increases, inflation would increase. When inflation increases, automatically the currency would lose the value, right? So the value of the currency gets eroded bit by bit. So this is the option which you are not going to actually take as a government or an RBI when you want to slide the stop the slide of Indian rupee. So answer is D. Okay, so the last one would further cause the deterioration of the rupee value. A, B, C is not so, they cause appreciation. Clear? Next, purchasing power parity exchange rates are calculated by comparing the prices of the same basket of goods and services in different countries. Is it right? Absolutely, it is right. Okay, same basket of goods and services you are going to compare, right? So the PPP theory essentially means just this. What is it? You have a basket of goods, right? You have a basket of goods. Let's suppose XYZ is the basket of goods and services. So the same basket of goods and services in India, if it is costing, let's say 160 rupees, how much would it cost in the US? Let's suppose it is costing $4. Okay. So now at $1 is equal to 80 rupees. $1 is equal to 80 rupees. So it would essentially mean $4 would be 320 rupees. Right? It only means that what is 160 rupees in India will be able to buy 320 rupees worth of items in the US. Okay. So 160 rupees here is equivalent to 320 rupees in the US. Okay. So that is your PPP theory. What are we comparing? Two baskets of goods and services. So the same basket of goods and services in different markets. So option 1 is right. In terms of PPP dollars, India is the 6th largest economy. So it is not the 6th largest, it is the 3rd largest economy, right? So as of now, it stands as 3rd. Even back then, it used to stand as the 3rd largest economy itself when the question was asked. So the answer would be 1 only. Answer is A. Next. This is related to 5-year plans. Rarely do you get questions related to 5-year plans. However, the only things you are supposed to remember related to the 5-year plans are what are the focus areas of each of those 5-year plans, focus areas, whether it was a success or a failure, right? If it was a failure, basically you remember the failed 5-year plans only, and these failed 5-year plans, why did they fail, right? Why did they fail? And also you are supposed to remember one more important aspect as to the major reforms, if there were any, like green revolution, in which 5-year plan did it happen, and then nationalization of banks, in during which 5-year plans did they happen, new economic policy, during which 5-year plan. So major things that happen, you have to remember only those things. Let's see if we are able to solve the question on the basis of these things itself. So from the second 5-year plan, there was a determined thrust towards substitution of basic and capital goods industries. So was that the case? Absolutely, that was the case. The Mahalanobis idea, right? So the stated objective of the second 5-year plan was, of course, rapid industrialization. Okay, with a particular emphasis on development of heavy and basic industries. It was aimed at establishing what we call as the socialistic pattern of society. Okay, socialistic pattern of society, that was the idea. Okay, so first statement is absolutely right. So second 5-year plan would be from 1956, right, to 61. Okay, the fourth 5-year plan adopted the objective of correcting the earlier trend of increased concentration of wealth and economic power. Whether this is right, you have to remember the context in which this 5-year plan came to the fore. Right, the first 5-year plan was from 1951 to 56. The second was from 56 to 61, and the third one was from 61 to 66, and 66 to 69 was a plan holiday. So the fourth plan we are talking about is from 69 to 74. Okay, this is the fourth plan, right? So during this fourth plan, what was happening in India? So this is when you undertook what we call as the nationalization of banks, 1969. That was for the first time nationalization was done on a large scale. The idea was that the concentration of wealth was happening, and the development was happening in a rather skewed manner, especially in urban areas. Only the merchants were getting the loans, and this changed after 69, right? And one of the plank that was put forward in the fourth 5-year plan was that we want to generate the wealth and distribute that wealth across the society, and that was one of the major focus areas of the fourth plan. So it emphasized on the reduction of concentration of incomes, wealth, and economic power, so that we could achieve what is called as the social equity, social equality, or equity and justice. Okay, so the second statement is right as well. And the third statement says the fifth 5-year plan. As we can see, the fifth 5-year plan, for the first time, the financial sector was included as an integral part of the plan. This cannot be so. Why? Because when we say the fifth 5-year plan, that would be from 74 to 79. Okay, this plan did not include financial sector reforms. Why? Because financial sector reforms as a whole was not a main thing till we came to almost 1991. This was not the focus area at all. Okay, so third statement you can directly remove it. So answer would be 1 and 2 only. A. Next, which of the following is issued by the registered foreign portfolio investors, that is FPIs, to overseas investors who want to be a part of Indian stock market without registering themselves directly? All you need to know in this particular thing is you just have to know the definition of each of these instruments that are given here. So the first one is certificate of deposits, right? So it is a short-term money market instrument that we know. So short-term money market instrument, it is usually issued by the commercial banks, right? Usually issued by the commercial banks and some financial institutions, right? So these are transferable from one party to another party. So easily transferable, right? Transferable from one party to another party. So they can be issued by whom? The commercial banks and financial institutions. So they borrow by issuing these certificates of deposits. Second one is commercial papers. These are rather unsecured. Again, short-term money market instrument. Okay, so it is also short-term money market instrument, and then they are usually issued by whom? The firms or the corporates, right? And third one is a promissory note. So it is any financial instrument, right? Financial instrument which works just like your commercial paper itself. However, it is also unsecured, I would say, and it is issued from one party to another. So it can be a standard word which can be used for commercial papers, certificates of deposit, even your bank note is a promissory note. Okay, so by that measure, this is all mostly to deal domestically in the money market. What about the participatory note? So that is the one which is the answer. Okay, so participatory notes work like this, where a foreign portfolio investor comes and invests in the Indian stock market. So if there is an individual living abroad, can he invest directly in the Indian stock market? No. When he is not allowed, if he has to get the registration and all that, it is a cumbersome process. So what he is going to do, he is going to put his money with the FPI is going to invest the money in Indian stock market, and what this person is going to get in return is known as a participatory note. Clear? So he need not get registered here in India directly. Okay, so that is why the answer is participatory note, that is D. Next, in the context of India, which of the following factors is or contributor or contributors to the reducing the risk of currency crisis? So which one will reduce the risk of currency crisis? Currency crisis means the sliding of rupee, right, or a BOP problem, right? So sliding of rupee can be the problem, or BOP issue, as in we don't have enough dollars to make the payments. Okay, which can reduce the risk of currency crisis. Then foreign currency earnings, basically we are exporting more, that is why we are earning a lot of foreign currency, so BOP problem can be averted. So by the Indian IT sector or any sector, if it is earning foreign currency for us, that would be good. So one is right. Second, increasing the government expenditure, let's say, for now we don't have an idea for that. Thirdly, you have the remittances from Indians abroad, again that would be dollars inflowing, which means we have a strong BOP. So increasing the government expenditure, what would it lead to? This would essentially mean that inflation would go up again, money supply would increase, inflation goes up, erosion of the currency value, right? If erosion of the currency value happens, obviously the rupee will slide downwards. When the rupee slides downwards, depreciation of the currency would happen. Depreciation means high import bill. Yes, that would be the problem. So it is not going to reduce the currency risk. In fact, it is going to make it worse if there is anything. So option number 2 cannot be the answer for this. So 1 and 3 only, you have B. Next, it is a fairly simple question. There is no need to scratch your head over this. Very simple. Not included in the assets of a commercial bank. So what is an asset? Asset is anything that earns you a return, earns some sort of return. Okay, some sort of return. When you either liquidate it, right, or when you have made an investment, right, so it is going to earn regular returns, right? Let's suppose advances. What about advances? The loans given by the bank. Will it earn returns? Yes, in the form of interest rate. Deposits. So the deposits made by someone in the bank. What about this? It is a liability for the bank. It is supposed to pay it back, right? It is a liability. Is it earning something? Absolutely no. Investments, will it earn something for the bank? Yes, obviously it is going to earn probably some sort of a dividend or interest rate, right? Let's say it has invested in gold. As the gold prices go up, it is going to earn some profit out of it. So money at call and short notice. So call money, short notice money, what is this? This is about interbank lending. So as soon as you see lending, it's an asset, right? So it is going to earn some sort of interest rate again. So the only thing which is not going to earn anything for the banks would be deposits. So the answer is B. Next, most of India's external debt is owed by the governmental entities. No, this is very much static related. So every time the government of India says that we are in a very good position when it comes to external debt, just remember this 80-20 rule. Okay, of the external debt we have, right, 80% is private external debt. Private entities own, have to pay this 80%. 20% is owed by the government. Government is supposed to pay 20% of the external debt. Out of this 20% of external debt which the government owes, 80% is long term and 20% is short term. And that is the good thing, right? That is the good thing. So remember this 80-20 rule. So first of all, we have only 20% to pay, right? Out of the entire external debt, the government debt is only 20%. And again, in that 20%, 80% of it is long term, right? So over some 15-20 years, you can pay this debt. So 20% is short term. That is within a year, you are supposed to pay this 20%. So that is a very good, position we have externally. So the first one, most of India's external debt is owed by governmental entities. Absolutely wrong, right? It is the private entities. So one is wrong. All of India's external debt is denominated in US dollars. So whether it is denominated in US dollars or not, well, we show that show that it is in dollars. The debt is in dollars, but what we owe is not only dollars. We owe dollars, we owe rupees, we owe euro, right? And many other currency debts we have. But to get a holistic picture, we denote it using dollars, right? The debt is denoted in dollars. It's not denominated in dollars. So the debt we have, maximum debt we have is in dollars, and second highest debt we have externally is in terms of rupees. So all of India's external debt is denominated in US dollars? No, right? Majority of the debt, external debt, is denominated in US dollars. That is right. So instead of all, if it was majority, then the statement would have been right. So as of now, the statement is wrong. So answer is D, neither one nor two. Next, the economic cost of food grains. The economic cost of food grains to the Food Corporation of India is the minimum support price and bonus, if any, paid to the farmers plus something else. So first of all, let's see what is the economic cost. Okay, so economic cost of food grains to the Food Corporation of India would include three components, actually three main components. One is the procurement cost. Okay, one is the procurement cost. The second one is procurement price, right? Procurement price. And also you have the distribution cost. You also have the distribution cost. So, so what is this procurement cost? That is already given as MSP and the bonus that is to be paid. Procurement prices, that is the bonus that is paid. So this is already done, right? Both put together, right? We can say that all the charges you are supposed to pay would be MSP is included here, bonus is included here, as well as any other incidentals, procurement incidentals, that is office fee, right? All of that would be included here. What is left out? Only the distribution cost is left out. So what does this distribution cost entail? So the distribution cost would entail that what is the freight cost? That is, you have to load, unload, and then handling charges, storage charges, that is go downs, right? Losses during transit, all of it would be distribution cost. So the answer would be procurement incidentals plus distribution cost. So when we say procurement incidentals for and charges for go downs, what about the freight, handling, and then losses? That is not covered in option D. So answer is C. So A can be removed quite directly. B also can be removed directly. C and D, you have a confusion. Here you just have to look at what does distribution cost include. It also includes the charges of go downs. What this option D does not include is many things like freight, handling, losses, right? That is not included in option D. So the answer would be C only. Next. The chairman of the public sector banks are selected by. So this was something which was changed in 2014. Okay. So it was based on recommendations given by a committee led by PJ Nayak, right? The PJ Nayak committee gave the recommendations. So it gave a recommendation to set up a board, right? A boards bureau called the Bank Boards Bureau, BBB. So it is a autonomous recommendatory body, right? So while selection is made by this BBB, the final call on it is taken by the finance ministry, right? The FinMin takes the final call along with the consultation with the PM's office, PMO. Okay. So this Bank Board Bureau does not only select the chairman of public sector banks. It also does some other work as well. It was in news back then. So it also does the work of recommending personnel for appointment as directors in government owned insurance firms like LIC, right? Insurance companies, or for that matter you have the pension funds, government owned pension funds. So in all these entities, the top positions, the selections are done by the BBB and the names are forwarded to the FinMin, right? And the FinMin is going to take the final call after consultation with the PMO. Clear? Next. What is the purpose, or what was the purpose of intercreditor agreement? This was again in news. It was a very simple question. Why? Because there was something called as Sashakt, which was very much in news back then. So Sashakt was a particular plan which was given by Sunil Mehta committee. About what? About dealing with the stressed assets or the NPAs, right? Resolution of NPAs. For that, Sunil Mehta committee had given a plan called Sashakt plan. And this Sashakt plan entailed 5-pronged strategy. Okay, it entailed a 5-pronged strategy. Out of this 5-pronged strategy, there was a second prong. The second prong belonged to the idea that whenever the stressed assets are more than 50 crore rupees, up to 500 crore rupees, in such situations, there will be a consortium, right? That is committee of creditors, let's say. Committee of creditors, all the creditors who have lent the money, they all will come together and they are going to come up with a plan and resolve this NPA issue, right? So this was aimed at the faster resolution of stressed assets of 50 crore or more, which are under consortium lending, right? Group of banks or financial institutions lending. So D is the answer quite easily, right? So what did this intercreditor agreement say? It just meant that once this consortium comes together and forms a committee of creditors, if the majority of this committee decides that we are going to go ahead with a particular plan to resolve this NPA issue, other committee members also are supposed to accept. If they don't accept, then they are supposed to either purchase the NPA or sell their NPA, right, to the other members at a cheaper price. So that was option D. C, to act as independent regulator, absolutely not. To support infrastructure projects, unrelated. To lessen the government of India's perennial burden, C, unrelated. So it was pretty straightforward question. It was related to Sashakt, right? It was a very easy question back then. And then you have the Reserve Bank of India's recent directives relating to storage of payment system data, popularly known as data dictate. Command the payment system providers that So this was completely current affairs related question again. So what did this data diktat say? It basically meant that whatever information is related to the payment systems which are operated by private entities or any entity, they should be stored, the information related to the customer should be stored in a system only in India, not abroad. That is what the data diktat said. So statement one is right, absolutely. And as I told you, this payment system data will be stored by both private entities and the public entities, whosoever are providing the financial services. So this diktat cannot be only for the public sector entities. Okay, so option 2 is wrong. Option 3, they shall submit the consolidated system audit report to Comptroller and Auditor General of India. Why did the Comptroller and Auditor General of India come into an issue which is so trivial, right? That is payment system data related. So for this reason, this answer for this would be one only, that is A. So who else would be the one who will be auditing this particular data? That would be done by CERT, right? That would be done by CERT in, okay. So that's about it. It was a fairly simple set of questions, right? So all the questions were pretty straightforward in at least 2019. Every year what you find is that almost in every year you have some 14 to 15 questions coming from Indian economy, out of which there will be at least 13 questions you will be able to solve rather easily using the static knowledge itself. Okay, even if you find a more weightage of current affairs, still what you would see is with the strong static knowledge you'll be able to eliminate one or two options and you'll be able to get to the answer. Okay, so thank you for watching. Have a very nice day. Do subscribe if you haven't already. Thank you.